Eric Mother to Mother.com. Just want to do a quick follow-up here. So about 2 days ago I made that video where when the markets were down huge here, which was Friday, and then they were down again huge on Monday. And about 2 days ago, today being Wednesday, I had sent you that video where I was speculating that the market could bounce. And of course you can check the video and just to see what I was looking at. But one of the things we were watching was a simple line, very powerful, which is the fact that the market had come back to test the previous, I guess, ideal movement of the lows. So once the RSI moved above this range here, you can see that prices did explode off the lows currently for 2016. So we had drawn a line from there, and 2 days ago the market was trading just around that line. The speculation was that if the market can bounce, and it seemed like it was gonna do that with uniform activity, which is exactly what we got over the last 2 days, exactly what we got. Now it only makes sense that the market is bouncing. Now I want to flip the script here, because yesterday when I sent that subscriber video, I was talking about the hourly chart, and what I was talking about here, which can best be explained by the Nasdaq. Let me show this to you in a second here. And we have to go to the daily charts and we take a look at the 14-day period. Just want to show you. So this is, let's go to hourly. Usually on my RSI setting I tend to use 26, but I want to show you here why I suspect more than likely we might get some type of a reversal, at least to test these lows here short term. And this is my reasoning. And yeah, I could be wrong, but I just want to explain to you my reasoning for this. Number one, let's go back to the recent movement lower here. You can see the RSI did spend some time here below 30.9. Generally, when an instrument spends time below 30.9, it means that even if it recovers, it's gonna have to test those lows. Just because of this time spent here, this is not indication of where things are going. And what I'm getting at here is, if you take a look at this chart, you can see for now that this has been a period spent below 30.9 as far as the Nasdaq is concerned on its hourly chart. Again here, RSI setting of 14 truly shows this. Because the market has spent some time here, any type of a bounce is suspect, because I speculate, and it's only speculation, so we have to be aware here, but I just want to do this for the purpose of understanding how markets behave, only for the reason of and for the purpose of education and understanding how markets tend to behave. Because I think what might happen more than likely is this RSI is going to have to come down, stop somewhere here at some point. We're going to have to insist that we see positive divergence, as the markets are either going to have to make fresh lows. So we have to see positive divergence. Let me change colors here. So we have to see an improvement in the RSI, as prices might more than likely either come to test the lows somewhere around here, either break them and start coiling higher. While this is happening, either a straight retest or break to fresh lows to scare more people out, we want to insist that the market gives us this positive divergence. And that's when we are going to know that any low might hold. Without observing positive divergence and a bounce, generally speaking, you tend to have a market that comes back to test the lows. And as a prime example, I need to go back to February lows. And what we have here is the S&P 500 hourly chart, and I've gone back to my RSI setting of, and I don't want to confuse you. You can keep the RSI setting at 26 on the hourly if you want, and I usually do. I was just using 14 to illustrate a point, so I don't want to confuse you. RSI setting for the hourly is 14. Is 26. All right. But anyway, what I'm talking about here is, you can see this market did make a fresh intraday low in February. While this was taking place, the RSI showed a remarkable improvement. In fact, you can take a look at this and you can see that the RSI did bounce twice on the same line here. So that positive divergence is what we need to see. After this positive divergence bounce, the market would go on to record this nice recovery. There's also, you can see another small, but when you look back and think about it, on hindsight, yes, it was critical. We made a lower low, but the RSI even short term improved. Now it's important to note that this improvement on the RSI, while prices were making fresh lows, the RSI held above 38.2 on the RSI level. This tends to be one of the best positive divergence levels. So now what I'm trying to speculate here is that around here, and I'll show you why I think around current levels the market could stall, is because you can see here that we might need to make this type of a move where we have retest or fresh lows as the RSI improves. So until we can see this positive divergence, we have to assume that the market will retest. Now I want to go back to the purpose of this video, which is I just sent you an email explaining why around here we can switch from the market showing a bounce to now looking for a potential reversal. And I have to go back to that NASDAQ hourly chart with the RSI setting of 14. Again, just for the purpose of RSI setting here is 14 on this hourly chart. The reason here I just want to show you illustration. Because we spent some time here, it makes sense. This is an indication that there could be fresh lows. You spent a lot of hours here on the RSI, indicating that any type of reversal on the hourly might be meaningful, because the RSI more than likely indicates it's going to have to come down because you spent a lot of time here going down. You're going to have to retest the lows. This is what I'm trying to hint at. And the reason why I say that is we can see a couple of things developing here as the market is trading at the highs for the day. So let's show that here. You can see June 29th, market's been open for about 3 hours or so, and we are trading at the highs of the day essentially. So that's how it's looking. So what I want to show you here is why I sent you that email. Is there a couple of things. You got topside resistance coming into play as far as this chart is concerned. Topside resistance. We are also coming back to test the previous break. If you go back and just figure out, and remember, you're just trying to understand the chart. So this break on the RSI brought the market off the highs there, and I'm just going to draw a line that has been on my chart for a while. It's somewhere around there. Now this line recently did give us a short-term reversal area, which is here, which is during this period. And now we are coming back to test the red line. Around here it would make sense for the market to stall. So because of that, I'm already leaning towards a market that now wants to pull back. And if you take a look at the Dow's hourly chart, and here I've gone back to my default setting on my RSI of 26. So you can keep it at 26. The 14 setting on the NASDAQ chart was just for illustration. Here we can see that the Dow did spend a couple of hours below 30.9. Generally speaking, that means a retest would make sense. So, and you can see that in my opinion what's happening here is the market is coming back to test the previous break recently. This break was instrumental in that it brought the market off this level, and we had a major 2-day drop. Now we are coming back to test that level with this market moving higher, Dow up 247 for the day. And also we can draw a line connecting RSI highs, which is also coming into play right now. So around current levels it would make sense for the market to stall. That's why I'm leaning to anybody who was playing the bounce, got the bounce that we were expecting, and now you kind of lay off a little bit, wait for the market to come down, or wait to see if the market does pull back. So that's one of the reasons. The other reason is take a look at the daily, and I also speculate that the previous support line is coming into play. Now this support line was broken. It's good, very good support. Previously I'd held the market together. So support here on the line, get the market the lows, support on the line led to a multi-day pullback, support on the line led to a multi-day pullback. We broke below that, you see that, and that break was good enough here to bring the market down. I think what's happening is a back test of this line. So even day to day, if the market was to close around here, if you draw this line, you can see right now what's happening is the market is coming back to test that break line on a day-to-day basis. And if you consider the hourly considerations on the RSI, you merge those two arguments together, you see that around here the market could pull back, which is why I'm saying let's just hold off from being aggressive buyers of the market. Wait for the market to come in. Now let me add one more chart, and it is for the Dow 30-minute chart. So here I've gone to the 30-minute chart as I try and figure out what the market is trying to do. So 30-minute chart with the RSI setting at 26, which is my default for small time frames. Okay, I want to show you the same thing, that why I'm leaning now to a market that wants to pull back. Keep in mind the Dow Transports spent a couple of hours below 30.9, so that is indication that there could be a retest of these lows. So we can see that topside resistance right now is coming into play as the market is screaming higher, up about 240, and also coming back to test this level here. This level has been instrumental since the break. That turnaround break brought the market off the highs here, and ever since it's been giving us short-term sell signals. All of these have been short-term sell signals, and now we are coming back to test that level. My speculation here is this is where the market starts turning around and probably starts the journey to test some of this recent 2-day reversal. Of course, we shall see whether it's going to be a nice retest and a bounce, or a break and then a move higher. At some point, we want to insist that the market gives us an improvement in the RSI. Positive divergence is what we are looking for. Once we see that positive divergence on the 30-minute charts and also on the hourly charts, when we see positive divergence, that's when we are going to know that now the market has given us a good reason to be aggressive buyers for a sustained move higher. We shall see how things go. I'll keep you guys posted. Eric Muadeth, Muadeth.com as always. Good luck, peace, and blessings. EACS.